Hello and welcome back to AIBC Summit YouTube channel. We're here to bring you news on all things blockchain and crypto. Now what we're talking about at the moment is the US election, probably one of the largest political events that Bitcoin has seen in recent years. As the crypto industry seems to be becoming more popular than ever, how will the US elections impact the market? Traditional markets are factoring in some volatility, but what about the cryptocurrency prices? Well, Hayden Hughes, Senior Market Strategist at XBullion, joins me to discuss. So Hayden, thanks so much for joining me today.
Thanks so much for having me. Great to be here.
It's great to have you. Now, I do want to ask about what we're seeing at the moment. We're seeing Bitcoin price kind of hovering around this $10,500 mark, which was really the level that we saw before the COVID crash in the global markets. And this crash was really a turning point because we saw that Bitcoin's adoption was accelerated, and we also saw it really establish itself as an uncorrelated asset to traditional stocks, and it was getting a lot of recognition from top market critics like the likes of Peter Schiff. Are you expecting the same kind of non-correlation in the build-up to the November US elections?
Sure. Well, look, there's a few things to unpack, and I think Bitcoin is a great asset for anyone wanting to decorrelate their portfolio from other stuff. So, of course, what you mentioned, the Bitcoin price hovering around 10,500. What we tend to see, and there's a great chart that we can maybe put up from JP Morgan, they talk about the quote-unquote intrinsic value of Bitcoin. And so what that really means is the cost to produce one Bitcoin. And so what we see over time is that the price of Bitcoin, the market price, generally tends to revert towards that miner break-even cost. So what we've seen this year, the weather in Sichuan province in China, it's been quite wet, as normally happens at this time of year. So what that means is that electricity is cheaper, and so it's easier to produce Bitcoin. So it is, when miners can mine Bitcoin at a profit, they of course will immediately sell. They're not like you and I buying for the long term. They've got all the Bitcoin they need and then some. So they're trying to offload. So what we see is generally that price tends to, when the market price is above the miner break-even cost, or what JP Morgan would call the intrinsic value, then miners tend to sell. And when it's below, it tends to pump up. So I think, what we've seen is a very steady hovering around that 10,500, 10,700 mark, which is roughly the price that it would cost to produce one Bitcoin. Of course, we don't have all of the details from all of the power plants in every single part of the world. So we're really aggregating the input costs there on the electricity. With respect to the correlation, I think, look, we saw in March, and this is not my first market cycle, Bitcoin and everything else sold off at the same time. That March 13th to March 16th should really be seen as a black swan event. And in those situations, and look, we saw it in 2008, we saw it during the dot-com crash, everything that is not physically bolted down to the floor will be bought and sold, or will be sold rather. So I think it's really important to understand within the context of the correlation being as high as it was between Bitcoin and everything else, even things that were supposed to behave counter-cyclically got sold off. And you saw that with commodities that are scarce, including gold and silver. So I think as we're heading into the US election season, it's really going to be interesting to see the margin of victory or loss. It would be unlikely, in my view, that we're going to get a landslide, either Trump or Biden taking the prize. And so I think what we'll see is actually, we won't know on election night. There might be a few states that are too close to call. And then we could potentially head into a situation like we had in Florida in 2000, which you recall took, I believe, 5.5 or 6 weeks. So lots of uncertainty. I think very hard to say what Bitcoin or other assets will do. Obviously, in the long run, Bitcoin is something that's very scarce, and there's a fixed supply. So we're conscious of that as the market moves on.
And you made some reference there to election night, and I think now once we look at the build-up, we also have to look at the aftermath of the outcome. So we have seen one chief investment strategist at Morgan Stanley saying that technology stocks may still perform well in a blue wave as Democrats won't be as tough on technology regulation. So when we look at the regulation of cryptocurrencies across the US, from a regulatory standpoint, is there a favored outcome that might make the industry more positive in the longer term?
Absolutely. I think the current SEC chairperson who's just been appointed is really lauded as someone who's very pro-industry. Of course, the approach of regulators, not only in the United States, but across the world, including here in Singapore, where I live, has been one that is very concerned with protecting the retail investor. Hedge funds and banks and companies that have billions of dollars to do speculative investments are really not seen to be the victims in these large, complicated systems. So the regulator is really looking out for the everyday mom and pop investor. And of course, if you look at the prosecutions of some of the cryptocurrencies, and there haven't been very many, if you were to think about just going back to the ICO days a little bit, there must have been 50, 100, 150 ICOs that raised capital from US investors. Really, we only saw 8 to 10 prosecutions, and most of those from the SEC's point of view were situations where there was fraudulent activity, where people were breaking the law. It was a Ponzi scheme, things that were very clearly wrong. So I think that focus on protecting the retail investor can be seen from the enforcement history from the SEC. So I think the focus moving forward is always going to be on that retail investor, on the mom and pop investor. And I think what you're starting to see now in countries outside of the United States, and I'll refer to Singapore, the regulator here in Singapore has created the Payment Services Act, which is a bill and now a law that regulates the sale of crypto. And so the law has been passed, and they've said that firms can apply for licensing. And what that now means is that firms that apply for licensing are exempt while they're leading up to actually having a decision. So it's been a very long window between the time that this law has hit the books, and we're still not over the hill in terms of actually seeing those approvals come through. Hong Kong has a similar regime. They're a little bit ahead of Singapore. They created a sandbox, and they've just started giving licenses as well. So I think from the United States point of view, I don't want to criticize the regulator, but whether it's a prosecute the bad ones on a case-by-case basis approach, or whether it's a more prescriptive approach, as you see in some of the Asian jurisdictions, I do think that the retail investor will be the focus. And I think that in the long run, we will see regulations. In the United States, it's worth mentioning as well, there are a hodgepodge of existing state-based regulations. So, of course, in New York, you have FinCEN, there's the money transmitter licenses. And so there are existing ways for players that want to sell crypto to comply. It's really just a question of, are we going to have a standardized national framework, and is that going to happen in 12 months, 36 months, 48 months? Really anyone's guess at this point.
We'll have to wait and see there. And Hayden, just finally, because I know that you can give us some excellent insight on this, you advise traditional institutions and also large corporations as they really evaluate their investments in the space. So what's the view on crypto from the traditional financial world? What's your perspective?
Sure, great question, and thank you for asking. I think, look, we work a lot with high net worth families and asset managers, and we're really only getting to a point now where there's infrastructure that resembles what we have on traditional markets. So a little bit before my time, but commodities and private equity in the 90s were something that was seen as a very boutique asset class, and they're now something that's traded every single day. So I think that's that process that's happened with other asset classes in previous decades is now happening with crypto. So there are banks here in Singapore that are beginning to look at offering custody solutions. We haven't had any confirmed announcements, but it has been rumored, at least in the press, that some of the local banks are going to be offering crypto custody. So the moment you start to get into a situation where your bank can offer custody, I think that's a really good sign that discretionary asset managers will actually begin to deploy assets into the space. Most of the conversations we have with investors are really just about helping them understand the value proposition. I think, and there's a great chart from CoinShares that really shows how well Bitcoin decorrelates from other asset classes. So irrespective of what happened in March or any black swan event, it really is, at least for the case of Bitcoin, an uncorrelated asset. And as we mentioned before, there are ways to value Bitcoin. It is a commodity, it is mined, it doesn't come from the ground like other commodities, but we mine it using electricity. And so there are input costs. On the demand side for Bitcoin, it's been reported recently that the Grayscale Investment Trust has been buying more Bitcoin than has been produced lately. So that's just one really strong indicator of institutional demand. I think on our side, our clients are really interested in just dipping their toes in the water. We've had very few people say, okay, I want to put 50 or 100 million in. And given the size of some of the clients we work with, they're, investing 1 or 2 million is really not a meaningful portion of the portfolio. But we're starting to see movement. There are custodians, and there is now regulated price discovery via the options, via backed. So we're starting to see the pieces come into play that I think institutions will need. I would say the smart money is already there. They're just not talking about it. You look at the order flows on the CME options on any given day, and there's a lot there. So I think there's the institutions. It's not right to say that they will be coming. I think it's fair to say they're already here. It's just the kind of more adventurous discretionary asset managers who are dipping their toes in the water. So we'll see what happens in the future. But I have a very I'm very bullish on the long-term prospects for crypto and digital currencies.
It certainly sounds like it. So overall optimistic. We're seeing some institutional intrigue as well, but maybe not the high level of demand that maybe we're expecting to see later on. So really interesting insights there, Hayden. Thank you so much for joining us on the line today.
Great. Thanks so much, Jess.
Thank you. Well, that's all from myself and Hayden. We'd love to hear how you found this segment. If you have any comments, please drop them in the comment box below. We'd love to hear them. In the meantime, be sure to subscribe to AIBC Summit YouTube channel for all updates on blockchain and cryptocurrencies.